Welcome back. Real estate, that's been, the buzzword over the last couple of months, a couple of years as well, where we've seen a bit of a cycle. And all these companies who are launching projects are managing to see a fair amount of these, turning into sales as well. One of them is Ashiana Housing. They've gone ahead and booked 168 units out of the total 280 in the phase 4 of their project called Ashiana Amarah, located in Gurugram, which is a sale value of close to around 403 crores. So to discuss this and more, we have Varun Gupta, who's joining in. Varun, thanks a lot for joining in. You've got, EOIs into sales of close to around 403 crores. How quickly do you expect to sell the remaining units? 168 have been sold, 280 currently. And at what price? Current 168 have been sold at 404 crore. So how much higher could the next be?
So we expect the remaining units to be gradually increased prices as we go forward. So I don't know exactly what pricing they will have, but we'll keep increasing prices every few months or even faster if as in the way the sales progress. And the pricing actually in phase 4, the biggest thing was we got very good pricing. This was more close to 25% higher than phase 3, which was launched just at the end of the last financial year. So in let's say a span of 5 months, we were able to ramp up pricing that high and got really good demand against that. So I think in this financial year, I'm hoping to sell off everything of phase 4 and launch phase 5 as well.
Okay. The reason why I ask you that is because if you just do quick back of the envelope math, your current realization per unit of the 168 that you've sold at 404 crores comes to close to 2.4 crores. Assuming the next 112 are sold at a 25% premium, as you pointed out, as compared to phase 3, then this could yield anywhere between 300 to 350 crores, 336 crores to be precise. Is that a number that is far out of expectation, or that is a number which is gettable in this year itself?
Okay, so a 25% increase on these prices, I think, is out of expectations, because if you look at Amarah phase 1 to phase 4, we have gone about 2.3x in pricing already. But that said, I think this we should look at about 300 crores of revenue coming in from the remaining 112 odd units, maybe a tad bit lower, but that's what my expectation.
So that's about a 10% increase.
Okay, all right. Varun, just wanted to get a sense in terms of your entire target. Your sales were around 2,000 crores. That's what you've guided to the market. Via an improvement in terms of mix of volumes and realizations. Are you on track, or based on what you're seeing, are you looking to probably even exceed it?
Yes, we are on track to achieve it or exceed it at this moment in time. The market is good, we are doing well, and right now things look very, very good.
So can you tell us what the pipeline is in terms of projects for you to probably achieve that 2,000 crores? What are we expecting in terms of incremental sales from you?
So, we are launching one project called Ashiana Swarang in Chennai, which is a senior living project. Outside of that, we have phase launches. As I said earlier, we expect to launch phase 5 in the last quarter of this financial year for Amarah. We are launching the new phase of 144, a phase in Malhar. We expect to launch a phase in Amod. So we have multiple projects where new phases will get launched, and a new project in Swarang in Chennai for sophisticated senior living.
All right. What about the land that you have on your books right now? As per the Q1 FY25 presentation that you had close to around 66.5 acres of land available. So how many land parcels are you eyeing in the next couple of years, and what's your current net saleable value that you are sitting on?
So current net saleable value of unsold units is around about 8,000 odd crores put together. Unsold stock in launch projects to future phases, land bank, everything, excluding one land, which is Milakpur, which is under litigation. So we don't have a line of sight on that particular parcel, but I exclude that. We have about 8,000 crores of saleable stock. And as of June, we had sold about another 3,000 crores for which revenue has not been recognized. So I think overall potential revenue recognition over the next, let's say till about 31st March 30 is about 11,000 odd crores, putting these two together. We are also working on multiple land parcels. I hope to close probably 4 transactions this financial year. We closed one in Jamshedpur. We are actively engaged in 4 more transactions. I hope that maybe probably 3 of those 4 will definitely should conclude in this financial year.
So these 3 out of 4, what would your outflow be in terms of acquisition, and where is it? Because you were looking to get into Jamshedpur, you mentioned Jaipur and other smaller cities.
So we concluded a Jamshedpur transaction, and which we disclosed to the stock exchanges. We have ongoing talks in Panvel, in Bangalore, and in Jaipur. I hope to conclude all of those. All of those will be funded through internal accruals itself. We might, we will put them on the platform with IFC, where we have a platform with them to provide capital for project acquisition. So either, so if it's a JV, it will be completely on our own, and others will go on the IFC platform. The overall outflow would, I don't think for us, we'll need to raise any other external capital outside of IFC right now.
Okay.
All right, take that point. Thank you so much for joining in and giving us the outlook on your business. Wish to connect with you once you sell the remainder of this project as well, and at a promised near 10% premium to the first 168 units at which you sold in this business. Take a short break. On the other side, an interesting discussion lined up for you. It's a conversation with Prem Pavoor, who's the senior partner at 8 Road Ventures, to talk all about their $250 million healthcare fund and, more importantly, growth opportunities in India.